Call the roll.
Calling the roll, Mr. Jones.
Here.
President Brady.
Here.
Mr. Hauser.
Here.
Ms. Simon. Ms. Simon is absent at the moment. Mr. Gallagher.
Here.
We have a quorum.
Can we have a motion to excuse Councilwoman Sunny Simon?
So moved. Second.
Moved and seconded. All in favor say aye.
Aye.
All right. Ashley, can we have an approval of our minutes for the July 23rd, 2018 meeting?
So moved. Second.
Again, moved and seconded. All in favor say aye.
Aye.
Our minutes are approved. All right, well, we have one item of resolution on our agenda today. And Ashley, please take a moment and read that into the record as well.
Resolution number 2018-0166, making an award on requisition number 42329 to Neighborhood Housing Services of Greater Cleveland Incorporated in the amount not to exceed $526,188.17 for administration of the Cuyahoga County Down Payment Assistance Program and Cuyahoga Urban County Communities in City of Parma for the period 4/1/2018 to 9/30/2019.
All right. And if someone would like to speak to this matter?
Good morning, Ken Surratt, Department of Development. I will introduce the item a little bit, but we also have the Executive Director of Neighborhood Housing Services of Greater Cleveland, Mr. Mike Cosgrove here, who has a presentation he'd like to share. It provides a little bit more detail about the program and how it's run. So the Down Payment Assistance Program actually has been with NHS since 2009. This is funded from our federal home dollars, which are for affordable housing projects specifically. In the past, since 2009, over 26 municipalities have been benefited from this program and have residents move in there and buy purchase homes there. Total over $2.6 million. This doesn't always come to the council agenda because of the amount. It depends on the federal funding at times. This time we did have enough funding from the current year as well as some rollover dollars to request the award for $526,000. For example, last year was $478,000. It really can go either way. Again, this is for first-time low-income home buyers in the urban county, and as well as Parma. Parma has elected, asked us actually to administer their down payment assistance program using their federal allotment of their home dollars as well. So with that, I'll open up to any questions that for me, or we can go to Mr. Cosgrove and do the presentation.
Any questions from the committee? Councilman?
This has been going on since 2009.
The actual program has been going on for decades. It's been outsourced to Neighborhood Housing Services since 2009.
So what's the statistics on the success of the homeowners maintaining the homes?
Is that something I can have Mr. Cosgrove talk a little bit more? But I do want to say one of the benefits, and I think one of the reasons that the program was outsourced is because in this community we actually are blessed with probably half a dozen or a little bit more of HUD certified counseling agencies. So not only before they can even buy a house, they really go through a pre-purchase as well as now a post-purchase counseling program that increases that likelihood. So I'll ask Mr. Cosgrove to come in.
And I'll ask one question of you, Ken.
Sure.
This is actually the first time it's crossed the threshold that it's come across.
No, the last time was 2016, and we had it.
2016.
Yes, 2016. It looks like it's been flip-flopping every other year for the last few years.
Okay.
Yes.
Morning, Mr. Chairman, members of the committee.
Good morning.
Right off the bat to the specific question, I didn't bring the number with me, but we have looked. We looked about a year ago, actually before I was with Neighborhood Housing Services, but NHS looked about a year ago, and we do know that the foreclosure rate is about half of what the countywide foreclosure rate is. Again, I can get specific numbers to Mr. Surratt because I didn't bring those with me today. And part of that, well, actually a large piece of that is because of the things I'll be talking about that goes in before we give the down payment assistance, which is the homebuyer education, as well as the fact that we underwrite the first mortgage as well, and we make sure that's not predatory. So, I think there was a study in the early part of this decade of OFA down payment assistance where they were experiencing higher foreclosure rates than the statewide non-assisted households. And the one thing that the consultant who did that study advised was to do a lot of things that we're doing, like the homebuyer education as well. So again, I'm Mike Cosgrove. I'm the Executive Director of Neighborhood Housing Services of Greater Cleveland. I have been there since January of this year. And while I'm here to talk about down payment assistance, I also want to give a little broad idea of what we do as an agency. So we've been around since 1975. We are a chartered member of what's called NeighborWorks America, which is a national organization of a little over 200 organizations, federally funded in part. It's a good network to be a part of because it allows us to do sort of peer-to-peer type things with our fellow lending agencies and other agencies, a good source of technical assistance. The other thing that's important is that they help us remain strong. Every year we do an organizational assessment that not only looks at sort of your typical A133 audit, but also looks at things like governance and how we evaluate staff and things like that. So, they help us ensure that we're giving sort of the best possible services. We are a HUD-approved counseling agency. We're also, even though nonprofits can lend under an exemption in Ohio law, we are licensed under the Ohio Mortgage Brokers Act and the Ohio Mortgage Lenders Act, the same acts that most brick and mortar banks are licensed under. We're also compliant under the Stopping Abuse and Fraud in Electronic Lending Act, which gives some more protections to those that we're helping. Just a little background on our activity for the last year. And this is overall, so this is not just down payment assistance customers, but we have educated 339 people households through our homebuyer education. Of those, 211 have achieved homeownership, including the 18 who received down payment assistance through this program. We also do foreclosure counseling. So the 176 households that we've helped preserve homeownership, that's through our foreclosure counseling. And then also through other activities, we have the ability to help people sustain their homeownership, whether it's through home repair or other financial capability counseling. And last, we have a very small development program called our Community Land Trust, which is an affordability mechanism. We have 26 units of property in the county, primarily in Cleveland, South Euclid, Shaker Heights, in that Community Land Trust program. So again, a little on what we do. Number one is achieving homeownership. So we have going back to 1975, we have a homebuyer education program that is very robust. To complement that, we have what's called financial capability counseling. So if someone comes in and they're not quite mortgage ready, we can help them address whether it's credit repair issues, whether it's helping them budget to build up the down payment in order to help them get to that dream of owning their home. Preserving homeownership, again, as a licensed lender, we have our home repair program. It's funded through capital that we receive from NeighborWorks. It is also funded in the city through Community Development Block Grant. But that's one way in which we help people preserve their home ownership. And then sustaining their home ownership through things like foreclosure prevention, also through reverse mortgage counseling. So that's broadly what we do. I want to move into down payment assistance. Again, I mentioned earlier that OFA study that, you know, if you just give out down payment assistance without doing more, you run a risk that your folks that you're helping actually wind up in foreclosure probably at a higher rate than what's typical. So, you know, just accentuating the homebuyer education requirement to ensure that folks are ready to purchase. And included in that, we also do not only sort of the financial piece, but the home maintenance piece. So folks know what they're getting into in terms of the responsibilities of owning a home. And we also have the financial capability piece, again, to help them get to that yardstick of being mortgage ready. So again, it was mentioned earlier, since 2009, we've administered this program. We've allocated a little more than $2.6 million of assistance funds, and that has leveraged $20 million in terms of the private lending that's gone into that in the county. I apologize for the size of the type on this one, but this gives you sort of an idea of, you know, how widely dispersed the funds are. Parma, of course, as was mentioned by Mr. Surratt, has its own allocation that gets pulled in, and that particular allocation only gets used in Parma. This is a 3-year history. We have a number of homes in South Euclid, Garfield Heights, but also a pretty good distribution of down payment assistance. I think, you know, one thing to be aware of in terms of the qualifications that, you know, potentially sort of limit where we're able to assist. Since these are county home funds, there is a maximum purchase price, which is $131,000. So naturally, that's going to limit a home buyer's ability to find a home that's, you know, of that amount. But it's single-family homes. It includes all the, you know, title search, other closing costs, inspection fees, things like that. The maximum assistance out of the DPA program is $24,999. And it's eligible for first-time home buyers, which includes folks who have not owned a home for at least 3 years. And they have to be, being home dollars, have to be within 80% of median income. So one key thing that folks need to know when they come to us is that they can't be under contract before they've had a homebuyer education, because if they're under contract, you know, they're locked in, and so they need to be able to make an educated decision about the purchase of their home. Going on, the way we size the assistance is designed to help ensure affordability. So we ask that homeowners bring 3% to the table. That could be other grant funds like Greater Circle Living and things like that. Well, not right. Some banks have down payment assistance programs as well. And then the way we come at the amount of assistance is basically the purchase price. We add 5% to account for closing costs, and then the assistance is 17% of that number. So what you wind up with is a household where they're not paying mortgage insurance because they bring the 3%, we bring the 17%, and that ensures that they're at 80% of value in terms of loan to value. Affordability period under 15,000 and under, after 5 years, half of the amount is forgiven as long as they remain in the home. If they cease to occupy it as their primary residence, then that mortgage becomes repayable. If it's greater than $15,000 of assistance, that time period before there's 50% forgiven becomes 10 years. And then the other piece is that we don't want to over subsidize. We don't want to give folks more down payment assistance than they need within their means. So post-purchase liquidity we're looking at in the bank account, no more than $7,500. because we interpret that as you could have brought more cash to the table. That we want to ensure that we're helping the folks who really need the assistance. So again, process, folks should not be under contract when they come to us. They need to get home buyer education, whether it's through us or another HUD certified agency. They need to get a pre-approval from us and before they do their house hunting. So it's at that point that they can then sign a purchase agreement. We will then get the first mortgage information from the home buyer. And we're gonna look at that to make sure that there's no balloon payment, no prepayment penalty, that the interest rate doesn't exceed 1.5% above prime, 30-year term max, no sort of risky features like interest-only payments or negative amortization. We're going to ensure that it's not a predatory loan. So again, to the question earlier on sort of performance, we're not just giving the assistance, and I think that's why performance tends to be well below what we see in terms of foreclosure within the county. And then lastly, just circling back to other things that we do, I've already talked about home buyer education. Land trust is an affordability mechanism in some hot markets where we essentially lease the property to a home buyer. It's a mortgageable interest. We lease it for 99 years. It helps ensure that when they go to sell that and there's appreciation, they get some of the appreciation, but some of the appreciation stays in the property. We also do home repair lending, as I mentioned, and financial capability counseling. We do home maintenance workshops. We do reverse mortgage counseling. In fact, we operate the NeighborWorks nationwide reverse mortgage call-in number. So there's a number in your presentation that if you have a senior who's looking at a reverse mortgage, we can talk to them and help them think through whether that's a good deal for them. And then we also participate in the countywide voluntary income tax program. So that was probably quick and dirty. Sorry to nervously go through too quickly probably, but again, any questions, I'd be happy to entertain them.
No, thank you for the presentation, Mr. Cosgrove. It was greatly appreciated. And I'm going to hold on to your PowerPoint for future reference. Want to open it up to committee if there are any questions? Councilman?
Thank you, Mr. Chairman. Welcome, Mr. Cosgrove. What would you estimate the need, that is, the people that would fall in the same category, and if you had enough resources that would be eligible as much as anyone else that would go through the whole process, if not for the fact that you only have so much, and congratulations because we got a little more. I'm always interested in understanding that perspective, because as much as we try, it has to be measured against what it is we have to do before we have any sense of our accomplishment, I think.
Right. So in terms of overall need, for the most part, we've in the past been able to certainly spend down, for lack of a better word, the allocation, which in the last several years has been under $500,000. Certainly there's you can always help more people, and I don't think we've reached a sort of a threshold yet where we've met the need.
I mean, I appreciate that,
Yeah.
but you're an expert in this area,
Yeah.
and I'm trying to get a sense for. Of course, there are more people that could be helped. Do you have any sense of are there lots of people asking, standing in lines, and you're saying, no, I'm sorry, we can't help you this year, apply next year? I mean,
I would say we sort of have a steady churn of people right now. So we don't have, because of sort of the annual allocation that we've been getting, we've been moving pretty smoothly. Like, we haven't had a line of folks who we've shut a door on.
So you really just don't know?
Right, right.
Okay, thank you.
Yeah.
To the President Brady through the chair, the one, and it's a number that it is hard to tell what that is, but one group of people that I think is definitely in need is actually the group that is between just over 180% to that 120%. So those above 120 can most likely get the bank loan and get the financing. Those under 80%, there's resources through the county, through the other entitlement communities as well, through their federal funding in order to kind of to meet that need. It's those people that are just in between that's the difficult part, and that's where federal dollars, unfortunately, aren't helpful. Back in the NSP days, we were allowed to go up to that 120%. And we got some really great market products there. But again, having that cap on how much the home value is, having the income limit on there, it really limits the pool of people with this particular program.
Thank you very much.
Well, Ken, still, the councilman's question is an important one. The foreclosure crisis was 2007. It appears we have outsourced this work in 2009. I don't know if you're aware of the historical, if you can give any insight into that. But there is a universal need within our county at the very least. I don't think it's, maybe as a county, you should know, is all the money being spent? Are the dollars used and we run out? If they are not, is it because you met the need? Or do we not have do they not have the capacity to spend all the dollars? I think that's a knowable number.
To the chair, the dollars get spent. That's not a question. There's definitely is there demand beyond that? I'll turn to Mr. Cosgrove. I'm sure, I think he said in his slide he had 339 or so people that did some initial of those 200 and something. So some fell off for various reasons, but there's definitely increased demand even at this up to 80% income level and the 131, and given the recent appraisal, that I think that actually even further limits some of the areas where people could purchase, because you saw values rise in so many of our communities that are now probably over that 131 mark.
It's actually opened, Mr. Chairman, it actually opened up a line of questioning that's pretty hard to avoid, and that's how did the tax appraisal increases of the impact on this program? Now, you've already given us a short answer to that, but quite clearly that's something we would need to try to understand, not only just about this program, but any program that was impacted by the increase in the values.
So, through Chairman, to the Councilman, a couple of things. First, to finish off the earlier point, where we are most keenly aware of the demand is, pardon me for sort of compartmentalizing a little bit, but we have been in talks a little bit with the city of Cleveland, because we did see a number of years ago, about four years ago, we wrapped up a 3-year program where we had funding from Wells Fargo, from one of the Justice Department's elements, that in 3 years, and it was confined to the city, it was within that 120% as opposed to that 80%, we were able to deploy enough down payment assistance out of that funding for 375 households in 3 years. And the city currently doesn't have a down payment assistance program. So we're looking at this program and sort of modeling off of that, putting a proposal together. Again, unfortunately, it'll be the federal money, so it'll be limited to that 80%. But there's certainly demand outside of the areas that this program helps. On the taxes question, I think where we'll see the initial impact is on the underwriting of what's affordable, right? So, you got to make sure that your front end ratio. So front end ratio is basically your housing debt. When you go in to get your mortgage, they're gonna have sort of a certain percentage that they don't want your housing debt to go above, and that's the same with us. So that number for us is 28%. So that's your principal, interest, taxes, and insurance. So if any one of those goes up, it puts it increasingly out of risk. And the total of those for this program has to be less than 28% of your income. So, that's one way in which this might impact, or in which the reappraisal might impact this program. Now, that said, standing here today, I can find out, but I don't know the extent to which people are up against that threshold when we assist them. Are folks at like 27% and adding another couple $100 going to throw them up to 29%? That's numbers I can figure out, but I can't tell you right now.
Any other questions from the committee? Councilman?
I just had a quick question, Mr. Cosgrove. So when I see the average mean income for a family of four, 56,000. Are there certain qualifications for this family of four? Could this be a mother with children, or if someone's taking care of an elderly family member, or is this what qualifies a family of four?
It's through the chair to the councilman. It's basically whoever is going to be living in the home. Okay. So whether it's a single mother, whether it's sort of a grandparent taking care of a grandchild, which we often see, it doesn't really matter. It's just whoever the related folks are that are going to be living in that home.
Okay.
Early on at the start of your presentation, you said our foreclosure rate was half. Were you referring to the state foreclosure rate, and the county being half of that, or?
Mr. Chairman, I was referring to the foreclosure rate for the folks who have been assisted, at least since we've run the program in 2009, compared to the overall countywide foreclosure rate, not statewide. The place where I got into the statewide foreclosure rates was a commentary on that OFA program, where they realized that they were above the statewide foreclosure rate, and so they had to put in homebuyer education and things like that. So.
Okay. You also mentioned that the down payment amount you calculate to make sure you don't over subsidize.
Correct.
What are the factors? How do you make that determination?
So it ends up being just a pretty bright line rule. So if you've got 7,500 of liquid assets, cash in the bank account, basically, if you've got more than 7,500, then you have to contribute that towards the down payment. So, and most, it's with the folks we're talking about, we don't really see anyone that has that. But basically, if you come in and you have $15,000 in the bank account and you're seeking this funding, we're going to ask you to contribute, half of that towards your down payment, and we'll lower our portion accordingly. Again, it doesn't happen often with this population.
So half of what they might already have.
Right. Well,
as part of the
again, the bright line is post-purchase, they should have 7,500 maximum in the bank account.
Okay. Do you require something of them?
We require 3%.
3%. Okay.
And that could be a gift. That could be, some banks have some down payment assistance programs as well. So, but through a combination of either their own funds or that, a minimum of 3%.
The heart of my question was, I remember during the foreclosure crisis, they said many did not make any down payment, which also made it easier for them to walk away when things got difficult.
Right.
So is that part of your calculation, that you still have to have skin in the game? Even
Exactly.
Okay. You mentioned the home repair lending program. Once they make the loan, do you qualify those who actually do the repair work, or is that beyond your scope?
We, with our home repair program, we have sort of a list of contractors people can choose from. We make sure that they get 3 bids, and we have a construction manager who helps review those bids. Ultimately, it's the homeowner's decision on that, but we do sort of follow best practice on 3 bids. And if they don't know where to start, we have a a list of folks. So,
Thank you. Your original list of all the cities that you served, the 26 cities, again, Cleveland was not on that list. I guess that's just a reality, but you also said they do not have a similar program. Are these dollars federal dollars? And maybe Ken can speak to that a little, how the pass-through dollars happen, how Cleveland doesn't. Can you give me some sense of that since I represent half of Cleveland?
No,
I get a sense of what they don't get, why they don't get it.
yeah, I appreciate that. And, and by the way, as sort of background, before January, I was community development director for the city of Cleveland. And so we administered both the home funds and the city block grant funds. So, this is the county, the urban county funds. You've got 5 entitlement cities: Cleveland Heights, Parma, Lakewood, Euclid, and East Cleveland. Thank you. And so Parma has chosen to basically pool its funds, which is why we assist Parma, because there's a chunk of money coming from Parma that goes into this contract. But then the city of Cleveland hasn't done a similar thing. We used to have the Affordable Home Program, which was sort of a down payment assistance, but it was filtered through developers because we wanted to have them rehab vacant properties and then offer it to a home buyer. But right now, at least since NSP is no more, the city of Cleveland doesn't have a program. Now, again, I will say that we've identified a source of block grant funds that's not part of the city's annual budget. It's we actually we used to operate the cash program, which was a home repair program funded by block grant. We're proposing repurposing some of those funds. And again, that's going to be a conversation with the city, but I think our experience with Wells Fargo in doing 375 houses in a 3-year period shows that there's certainly demand out there within the city of Cleveland. So, and we'll probably model it after this program. So.
Just quickly to the chair, the other cities, Cleveland Heights, Lakewood, and Euclid, all do have their own, run their own down payment assistance programs with their own home dollars. Again, Cleveland and actually East Cleveland, to my knowledge, do not currently have them. One thing I do want to just remind you with the city of Cleveland is that the mayor does have his neighborhood initiative, and I believe all of these are part of. I mean, it's targeted to certain neighborhoods, but he is using home repair, home purchase, a lot of different tools, really kind of concentrated in a few areas for the city. So they may not have it citywide, but the mayor has some priority areas that
They have their own strategy.
Correct.
Okay. If there are no further questions from the committee, all right, any final comments?
No, other than thank you.
All right. All right, well, I will make a motion to, do we need second reading suspension? Please. All right, I'll make a motion that we move this item forward under second reading suspension. Do we have a second? Second. Moved and seconded. All in favor say aye. Aye. Ayes have it. All right. Is there any miscellaneous business? If not, if nothing else holds our attention, this meeting is adjourned.